Well, one of India's largest two-wheeler, three-wheeler company, given the fact that there has been so much that we have been looking forward to from Bajaj Auto, especially in terms of how exactly the entire market is panning out, especially the Indian domestic market as well as the large export market that the company caters to. Now, in that aspect, keeping in mind we are in the middle of localized lockdowns, especially after the second wave of COVID-19, that has been a big minefield as far as the entire auto space is concerned, given the fact so many of the companies have been forced to shut down factories and divert factories for other equipment manufacturing as well. Not only that, input cost pressures are being significantly felt by a lot of the companies. Also, not only are input cost pressures, commodity prices and have been on an upswing, and along with that, the companies have also been faced with various shortages in terms of semiconductors, in terms of various raw materials. So, in this context, where the company has had a very tough operating environment, even if Q4 FY21 was did not really feel the entire effect of all of these worrying factors as far as the entire auto space, especially the two-wheeler market, is concerned. What's very important to watch, and what was very important to watch from Bajaj Auto, was the commentary when it came to Q1 FY22. So now, when you're talking about the results, Bajaj Auto results were in line to slightly above what the 18-hour poll was anticipating. Revenues jumped up almost 21% on a year-on-year basis, coming in at close to 8,590 crore rupees. When you're talking about the reported core EBITDA, coming in close to 1,558 crore versus almost 1,292 crore rupees, up almost 20% on a year-on-year basis. Reported margins by the company, reported EBITDA margins at 18.1% versus 19% again on a year-on-year basis. When you're talking about the core profitability coming in close to 1,333 crore rupees, a little over 2% jump as far as profitability is concerned on a year-on-year basis. Very key things that the management has alluded to as far as the P&L statement is concerned. Management has said that Q4 FY21 witnessed a very sharp increase as far as input costs were concerned. This indicates that the company has clearly mentioned that they are feeling the effects of very high inflationary measures, especially when it comes to the making of two-wheelers within the nation. Not only that, the company has also said Q1 FY22 too is facing significant constraints in terms of raw materials, and input costs continue to increase in Q1 FY22 as well. Now, along with it, the company also made a very important announcement that Niraj Bajaj is going to replace Rahul Bajaj as the chairman of Bajaj Auto. Rahul Bajaj is going to be named as the chairman emeritus for 5 years. Now, keeping in line with the new dividend policy that the company announced a month ago, just prior to the results, the company has announced a dividend of ₹140 per share, and this is something that a lot of analysts as well as a lot of investors were keenly looking forward to. Overall, seems a steady step. However, the companies have mentioned that there have been significant worries in terms of rising input pressures for the entire auto space.